It's a mixed mood right now. It's an interesting mood right now, I think so. From my experience, from I joined like I got into crypto from 2013, so that was one bull market. That year, it went from $100 to $1,000, and then, there's a 1 year of drop in 2014, and then 2015, we started to recover. So it's 1 year sharp drop and a 1 year recovery, and then, 2 years of all-time highs, so that's 2016, 2017. That was then. Everyone's rushing it. 2013 was like a Bitcoin cycle. Everyone's like, well, what was this new thing about Bitcoin? 2007, he was an ICO here, so Ethereum ERC20 tokens. Anyone can issue a token, a white paper, a fundraising. And then 2018 happened, crash, and then 2019 was paying for recovery. And then 2020, 2021, again, the sort of all-time high years again. And that was DeFi, NFTs, gamifying, metaverse, all of the stuff. And all of this stuff is still quite new, but a lot of money put in. And then 2022, there's 3 arrows, there's Luna, there's FTX. So it was crusher. So I think now, even if we look at the price chart, we're kind of recovering. So now it's kind of a recovering mood, and people are still very cautious. It's not like formal yet. But now there's like meme coins, which I don't really afford, which I don't really fully understand. But there's also at this stage, it's unclear in 1 or 2 years, what's the next drivers that would cause explosive growth, right? Is that, I think it might be something new, right? I think NFTs, DeFi, they'll continue to grow, but those were inventions of the last cycle. They will continue to grow, and there may actually be more realistic use cases, etc. But from the perspective, what's going to drive the next one? I think the mood is everyone's looking for that right now. We're not sure, and this is probably why a lot of people put into memecoin, and they couldn't figure out what exactly is the next one. Memecoin sounds fun, but it shows that there are funds ready to be deployed. People want to buy stuff, and they look at meme points. They pile in, so that's my red. So we are at an interesting inflection point. Again, I could be very wrong. Hopefully, we have passed the bottom of the bear market, and hopefully, we are in the fort of a bull market. CZ, or Changpeng Zhou, is the founder and CEO of the largest cryptocurrency exchange in the world, Binance. C's first got into crypto in 2013, so he has a decade's worth of experience in the game. Being the CEO of the largest crypto exchange, he would have his finger on the pulse when it comes to the current mood surrounding crypto. On top of this, he would have one of the most informed and educated opinions on when he thinks the next crypto cycle are going to begin. C's just had an interview with bankers where he revealed his outlook on the crypto market and predicted where we are at in the crypto cycle. Although he believes that it is problematic to look to the past to predict future cycles, he does believe we have passed the bottom of the market and are most likely at the beginning stages of a crypto bull market. He states that Binance is ready for a 30x increase in the crypto market in terms of exchange volume, and stresses the importance for investors to be able to navigate the volatility in crypto markets to maximize their returns. Make sure to stick around to the end of the video where C gives his best prediction as to what is going to be the next big catalyst of the next bull run. Last time, we had NFTs and DeFi that truly drove adoption. C's answer might surprise you. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing, liking the video. It's free, and you can always change your mind. So there's nothing that says we have to get another cycle. The historical pattern, is quite clear if you look at it. But sometimes we're white until you saw a black one. So history doesn't predict the future, and we can't just stay because previously there were fairly distinct 4-year cycles. There's going to be a new one. So I think we've got to take that into consideration. Maybe it may not. So the way I usually position businesses is we should be prepared for a bull run. So we just got to make sure our systems can handle another 10, 20, 30x volume, but we should also be prepared financially for another 90% crash. Right, so we got to have the stamina to last. That's how we would run a business. That's how Binance is structured today. So we can survive on both sides for people. I would usually recommend similar situations in first. So everybody is in a different situation, so it's very hard to give advice to individuals but business. That's how I usually structure things. Bear market. I suppose the driver said, if you can just drive normally, if you're just not scared and going to the ditch, then that's like so in bear market it is basically about survival, right? So about stability, survival, etc. So in a rainy day, you don't drive as fast as you can, and you want to make sure that you stay on the road. So I think that's basically our strategy. It wasn't that, fancy when others were failing. We just said steady, we said secure. There was a massive bank run on us. People withdrew like $14 billion within a week. No, they would. There was basically no issues other than one bank didn't open for like 6 hours. That was a bank issue. And then crypto, there was zero issues. We actually told our team, make sure there are zero issues, right? Yeah, that was the best proof that, every coin is about back to module 1. So we were tested. So this back still comes back to the Lindy effect, right? So the more you tested, the more secure it could be. And doing bear markets, there are more consolidations, and even we're still seeing that today, right? If you look at the Canadian crypto market, there are more consolidations for the players just merged, and for the local exchanges just merged. We didn't really intend to overtake 15 cars. We just said, look, let's find a path that we can drive and stay on the road. That's all we did really. Yeah, I think the question should be changed. It should be not singular but multiple. So, the question, if we talk about the internet, right, we wouldn't say, what's the next big thing that would drive internet adoption? There are so many different things. There's video conferencing, there's, social media, there's Google as an information hive mind. There are a lot of different things going on. So in the early days, you may say, what's the next thing? I think for crypto, blockchain is beyond one single thing now. So 2017, there were ICOs, right? That was ERC20 tokens, basically. And 2020, even 2021, there's multiple things going on. The next one may be multiple things. It's no longer a single thing that drives adoption. I think because the industry is bigger, there are more players, so there are different sectors. We should be looking at what's the next big NFT thing. What's the next big DeFi thing? What's the next big new thing? Maybe social media for crypto has not been invented yet, right? And there's some old use cases that have not taken off, but are slow or starting to. Payments, right? Payments were one of the most obvious use cases, but there weren't stable coins, there wasn't Lightning. Network. There weren't real-time fast payments, and now the faster blockchains. There's been, there have been many new developments, and then we also have technologies that allow users to pay in crypto, and the merchants accept to test fiat, and it's the transaction that happens in real time. Like Balance Pay bonus card, a few other credit card solutions in the market. So we're seeing the global economy in turmoil. So there's a lot of uncertainty in traditional financial industries in the global economy. We're seeing Africa, now the mobile phone, smartphone penetration is getting there, and now they're latching. They don't have banks. Only lastly, less than 11% of people in Africa have banks, and they're just latching onto blockchain. So all of those things can be potential. I don't know which one. I think we'll see multiple. I guess you call them unicorns or however you call them, multiple successful new startups, new concepts, and plus old ones together that will shape the industry. So I think we'll see a lot more successes. Yeah, so actually, I did do a talk in United Nations in Geneva, I think, for 2018, 2019. So I did do a talk, but that was more about how to use blockchain to enable a transparent charity philanthropy efforts. But I think today, if I was going to do another talk, I would say financial inclusion, financial access. If the audience is United Nations, there are many nations, many people without financial access. People in less developed countries take them days to pay a bill. They don't have access to loans, and then don't have access to many of the financial tools that we in developed worlds are quite used to. So that would be the message I will stress, and blockchain is that right technology. There was this fund that just give loans to women that need loans to run their businesses in Africa. They have the lowest default rate of any loan business on the planet. So these are real women that want to do business, but they have no access to financial tools, and they run very simple businesses that do make money, and they're able to return the loans in a period of time, and this really helps their lives. So actually, the name of the fund is just on the tip of my tongue, but I can't recall it. So these are great things, and they can do this with blockchain. They can do this with much bigger scale, using the new technologies. So all of this can be done. So if I was doing a talk like that, I'd probably research this a bit more, financial inclusion and just stressed use cases in those areas. I think for anybody who feels wrecked, pressure, depressed, etc., reduce the size, so reduce the exposure to crypto. So the debate fundamentally, if you feel that if your investment performance affects your emotions, then you probably invested too much, by half it or 10 or reduced by a third or a fifth. And if you still feel that way, do it again until you no longer feel like that. You feel like, okay, this is meaningful money. I want to make money on it. And then, but if it drops by 20, 10, 20, 50, or even 100%, I'm still fine. That's the right size, I think. That's sizing is very, very important. So instead of listening to people on Twitter, oh, it's going to go up, it's going to go down, people don't tell about what percentage of their assets that they put into that trade. So that's super important. And then the risk management, we talked about it earlier. Don't put everything in one basket. Don't put everything in one trade. Don't put everything in one coin. All of that matters, but fundamentally, if people are feeling stressed, they invested too much, reduce the size and then try again. So also if you want to start with a small size, start with $100, with $1,000, whatever is comfortable to you. If you lose it, you know it's gone and you should be fine with it. If you make money out of it, then maybe double the size. Maybe slowly increase that over time. So don't go all in. So I think that's a very much risk management, but very specifically sizing issue. If you're stressed out about this investment and you know it's going to wreck your life, it's going to change your lifestyle, you're not going to be able to pay rent, and then the investment size is wrong. Yes, I've learned this lesson the hard way years ago. So I worked in Bloomberg, and then after Bloomberg, so 2005, I tried some trading on some stocks. Everything I traded just feels like anything I touch, it goes down. Everything goes up. So it was just so hard. And then even crypto, when I first got into crypto in 2012, 2013-ish, I've tried trading crypto a little bit, and then we're like, okay, no, just buy and hold. Just buy and hold. So I'm not a trader, and not in 90-something% of people are not traders, and there's nothing wrong with that. Trading takes a very special skill. It is, and the professionals are honed over multiple decades. Per person, right? So they learn this skill over many years, and there are many special tools. For most people, trading is difficult. For most people, they use it as a tool. It's buy, hold, and use for payments, commerce, etc. Don't trade. It's not for everyone. So for most people, I always say don't trade. But yeah, the emotional aspect of it. But I'm also in this industry, right? So I see a lot of traders. I see a lot of guys who do well, who don't do well. And the emotional aspect is very, very intense. So if you can't handle that emotion, then you got to reduce the size.